part of what's going on is tax loss selling. That's just a technical factor. Beyond that, I think that the fear of inflation and interest rates rising, especially after Chairman Powell declared that perhaps inflation is not transitory here, has scared the financial markets. This really started in mid-February, this correction. So this is a very long correction for us. We actually think the bigger risk is deflation by far. I disagree with Barry completely on this, and I look at these rent increases as major tax increases effectively on the lower income earners, and the same thing with gasoline prices. The University of Michigan Consumer Sentiment Index is lower now than it was at the depths of the coronavirus. Why? Because purchasing power is diminishing here so much. I also think that businesses that have spent the last year and a half scrambling to catch up with consumption, they were way behind, are now overdoing it. And we are in the middle of a major inventory build that is going to unwind next year. So that will be a cyclical deflation. And then innovation itself is inherently deflationary. We're seeing, just to give one example, artificial intelligence training costs dropping 60% per year, right? And AI is going to permeate every sector, every industry, every company. It's going to become, very competitive. So we think, and that's just symptomatic. There are so many other deflationary forces out there associated with DNA sequencing, robotics, energy storage, blockchain technology. So, and what we're also seeing is the convergence between and among these various innovation platforms, so that one S-curve is going to feed another and another. And so people are saying, well, then why are these stocks going down? The question we used to get is, we're in a bubble, aren't we? I said, we're not in a bubble. And now that our stocks are down, but the averages are up, many people are thinking we're in a bubble still. And we are, and it's called the benchmark stocks, which are going to be disrupted as the traditional world order is disintermediated and in often cases is going to be destroyed by this new world. So you can say I'm talking my book, but those are two massive secular deflationary forces. One is extremely positive. Deflation, learning curves, cost declines, price declines in innovation means we'll get a boom in innovation. The other side of that is there are many companies who, especially since the tech and telecom bust, and then again 08, 09, they've catered to short-term oriented shareholders who are scared. They've been scared ever since 08, 09, and they want their profits now, they want their dividends now. So these companies leveraged up, buy back shares, manufacture earnings, and didn't invest enough in innovation. They're going to face a lot of problems, and they will face the bad kind of deflation.